What makes this bill any different from this bill that the government says is worth something and they say that this one is not? Is there intrinsically any difference between these other than faith?
Of course not, but this one is a $50 bill and this one is a $1 million bill. That is the work of Mr. Ben Bernanke, the present chairman of the Federal Reserve. He'll make that possible.
Okay. Hi, I'm pleased to have with me world-renowned economist, Dr. Marc Faber. Marc?
Thank you for the compliment.
Thank you for being here.
My pleasure.
You've been speaking lately about China becoming one of the global economic drivers. Can you expand on that?
We have 1.3 billion Chinese, and that's only part of Asia. Altogether in Asia, we have 3.6 billion people, 56% of the world's population. We have 1 billion Indians, and it looks as if India is where China was 20 years ago at the beginning of a very major economic expansion. We also have 84 million Vietnamese who are very driven people, full of initiative. So the Asian economic bloc with 3.6 billion people is actually much larger than what is generally perceived in the Western world. And in particular, the Chinese economy has become very significant. If you look at the usage by China of different commodities in the world, then for most commodities, China is number one. And if you look at markets, not in money terms expressed in dollars, but in terms of quantity of production, then China produces 4 times more aluminum than the United States, 5 times more cement than the US. It has an annual steel producing capacity of 330 million tons compared to the US 101 million tons. So individual markets in China are frequently already much larger than in the US, and then that's, as I mentioned, just part of Asia. The Asian economic bloc is already today by far the largest economic bloc in the world, and therefore it is wrong to say, oh, the US consumer is the only engine of growth in the world.
Okay. You also mentioned that China is now running a trade surplus with the rest of Asia, though they have a trade surplus with us. We have a trade deficit with them. But with the rest of Asia, they're running a trade deficit. They're importing more than they're...
What is happening is because the productivity in China has increased so much in the last couple of years, they have become very competitive. And so they have a growing trade surplus with the United States. At the same time, what has happened is, if you look at exports from Asia to the US, then before, in the 70s, when China was still a communist country, the big engines of growth in Asia were Japan, Taiwan, and South Korea, to some extent Hong Kong and Singapore. These countries used to export to the US. Now, a lot of these countries are exporting components to China. They're then processed in China and then shipped to the United States. So whereas China has a growing trade and current account surplus with the US, they have a growing trade deficit with the rest of Asia. And of course, because of their huge appetite for raw materials, they have a trade deficit also with OPEC. But you have to give the Chinese credit, whereas the US has a trade deficit with OPEC countries of over $100 billion. The Chinese have only a trade deficit with OPEC of $4 billion because they're very good at selling goods to countries that supply them with raw materials.
Okay. And they're paying for part of that, the trade deficit with dollars that we're sending them, aren't they?
Yes, of course. But on balance, they have, of course, a trade surplus and also a current account surplus, and that's why in China we have this huge reserve accumulation. The Chinese have now foreign exchange reserves in the amount of about $1 trillion. And most of it has been invested essentially in US Treasury and agency securities. So basically what is happening is the Chinese are financing consumption in the United States.
Consumption and the budget deficits that we run every year.
Correct.
What do you think that that is going to do for gold eventually?
Well, basically the rise of China has shifted the demand curve for all commodities to the right and has led to rising commodity prices, whereby many commodities like nickel or copper or tin, zinc, lead, and so forth have gone up much more than gold. But basically, the incremental demand from China, and now increasingly also the incremental demand coming from India and Vietnam, has driven commodity prices higher. But at the same time, we have in the US Mr. Ben Bernanke, who is a money printer. And it is very clear to me that your US dollar will continue to lose its purchasing power. And eventually you will pay in the USA for a cup of coffee maybe $100. So here you have these funny bills of 1 million US dollars. I think that will become reality one day, that we will have in this country a continuous depreciation of paper money. So I think that US citizens should actually own some gold, some silver, and some assets overseas, and also they should have their bank accounts overseas, because one day when the dollar really becomes weak and when money loses its value, as it has already done for the last 100 years, then you may again have foreign exchange controls.
You've been one of the few people that has been pointing out that the grains and other foodstuffs have lagged some of the other commodities in this bull market, and that they are probably set to really take off and be some of the coming performers.
Yes, that's correct. I mean, until 2 months ago, wheat and corn prices were at 200 years low against energy prices. In other words, like oil has gone from $12 a barrel in 1998 to recently it went over $70, we're around $60. In the meantime, grain prices didn't do anything. But lately, they had big moves, and we had increases in prices for wheat, corn of 60% in 2.5 months. And all I'm suggesting is that whereas Mr. Bush doesn't believe in global warming, the fact is simply that temperatures have been rising. Now they may fall again in 20 or 30 years' time, we don't know. But when temperatures go up, it creates more extreme weather conditions, droughts and floods and heat and cold waves. And so you can easily get a bad crop somewhere, such as happened in the case of orange juice. 3 years ago, there was a glut of orange juice, and now we had a freeze, and so orange juice prices have gone up more than 4 times. And if you hit a bad crop for wheat or corn or soybeans, the price can go through the roof. I'd like to add that because of the policies that the US has embarked upon, namely to convert corn into ethanol, which is not profitable, I may add, and a stupid policy, I may add, that the supply of corn for eating, for feeding animals is of course declining, because a lot is diverted into ethanol production. And in my opinion, that will lead to, at some point, much higher food prices in the US. Now, this is important because food prices, I mean notably grain prices, have a very high value as an indicator of future rates of inflation.
Okay.